This is the Average Guy Network, and you have found Financial Tech and the Guide Rock Capital Management Commentary recorded on August 27th, 2013. I'm your host, Jim Collison, broadcasting live from the AverageGuy.tv studios here in Bellevue, Nebraska, and we post the show, including the written commentary, each week out at the AverageGuy.tv. Financial Tech brings you the latest market commentary from the award-winning Andrew Hunt, CFP and president of Guide Rock Capital Management, located right here in sunny Omaha, Nebraska. And if you'd like to receive a free copy of the written commentary in advance, or if you have questions or comments that we can read on the show and answer, send us an email. Actually, send that email over to Andrew_Hunt@guiderockcapital.com. We'd love to hear from you. Andrew, great day. We missed podcast early in the morning. We tried to get it done, and technical difficulties made it so we couldn't, but we're here tonight. How are you?
I am well. Let's dive right in. So much depends upon a red wheelbarrow glazed with rainwater beside the white chickens. Well, the U.S. Federal Reserve's monetary policy is a lot more complex than the simple tools mentioned in the often memorized William Carlos Williams poem, The Red Wheelbarrow, which I just recited. But an awful lot is depending on it. Those countries that have been affected negatively by the changing expectations about quantitative easing, the importance of chickens, wheelbarrows, and other basic tools to a family's economic well-being has not been forgotten. During the past 10 weeks, currencies in many emerging countries tumbled against the U.S. dollars on expectations that the Fed will begin to taper off its bond buying program, which we've talked a lot about on this program, and it's known as quantitative easing. The Brazilian real sank like a weighted fishing line, dropping almost 16%. The Indian rupee dropped almost 12%. The Indonesian rupiah lost 7%, and the Malaysian ringgit fell by a bit more than 6% during the period. Also, the Mexican peso and the South African rand dropped as well, but both have recovered some value, in part because they don't have large deficits, according to the Indian Express. China and South Korea, which are strong exporters, saw their currencies dunk down, but both bobbed back up. According to the New York Times, currency weakness caused several emerging markets to lose significant value recently. India's stock market lost 1/4 of its value during the past 3 months in U.S. dollar terms, but market declines in local currency terms have been much smaller. A recent New York Times article pointed out from the end of 2000 through the end of 2010, the developed market rose a scant 5%. We all remember that, just 5% in the developed market. The emerging markets index more than tripled during that same period. Since then, however, the developed markets have risen nearly 20%, while the emerging ones have fallen by about the same amount. So as we mentioned before, mean reversion theory suggests prices and returns adjust towards a mean or average over time. That raises an interesting question. Have recent market shifts been adjustments towards a mean? I'll let you guys marinate on that one for a little bit. Okay, let's switch gears here a little bit. The next big things. In May, the McKinsey Global Institute released its latest thinking on disruptive technologies. That is, technological advances which have the potential to disrupt the status quo and transform life, business, and the global economy as we know it. Among the dozen technologies mentioned in the report were a couple that I wanted to share with you guys a little bit about today. The first is mobile internet. We're all familiar. This is the Average Guy Network, of course. There's several shows on here devoted to technology, and mobile is huge. We're expecting mobile internet to improve productivity and delivery of service. McKinsey estimates that one application, remote health monitoring, could reduce healthcare costs by up to 1/5. The next thing is the automation of knowledge work. Knowledge work is a brain twister of a category that encompasses intelligent software systems, which could produce output equal to 110 to 140 million full-time workers. The third piece is the cloud. The cloud delivers service over the internet or a network. It can improve the productivity of IT infrastructure, application development, and packaged software by 15 to 20%, McKinsey's saying. Then, of course, this has been on the rise for many decades now, but even more advances in robotics. This could improve the lives of 50 million people who are missing limbs or have impaired mobility. Also, industrial manufacturing and service robots may really change the face of labor. 3D printing. 3D printing has been all over the news. I listen to a ton of NPR. You can't listen to NPR and not hear about 3D printing. McKinsey says that 3D printing may offer the ability to manufacture custom goods at home, while medical industry may be able to use bioprinting technology to bioprint tissues and organs in the lab. And then finally, autonomous or semi-autonomous vehicles could save 30,000 to 150,000 lives by eliminating potential fatal traffic accidents. And of course, Google's come out and said that they're building the automatic car, which will be interesting. We'll see what happens there. According to the report, these ideas can, quote, change the game for businesses, creating entirely new products and services, as well as shifting pools of value between producers or from producers to consumers. Okay, guys, so here's the quote of the week. This is from John Wooden, the American basketball player and coach. It says, if you don't have time to do it right, when will you have time to do it over?
Very nice. Sounds like something my dad might say to me, Andrew. as we heap guilt on our children for not doing things right the first time. Let me ask you this question. So you listed off 5 technologies there. Which one do you see as being the most disruptive, maybe in the next decade? So
Me personally?
Yeah, you personally. What do you think as you look at that list?
Well, I mean, it's kind of a toss-up for me between the cloud. I've seen so much improvement in technology as an end user just from cloud applications that we've implemented in our business over the last 5 years. It's unbelievable. I think I got to commiserate with you a little bit about computer problems I had early this year. I went through 3 computers in 3 months, but luckily, because all of my software applications are on the cloud, it was really more of a hassle than it was. I mean, could you imagine just 5 years ago what that would do from a business continuity without the cloud? So the cloud's a big one for me, and then digital printing is pretty exciting too. 3D printing rather. 3D printing could really be huge in the medical space and the manufacturing space, and really putting the power back into the American inventors' hands, which is pretty exciting. I think that 3D printing, as we see costs come down, is going to, it reminds me of the Jetsons. That's what it reminds me of.
Yeah, and 3D printing has come a long way. We did an engineering fair, I think last spring, out at UNL, University of Nebraska at Lincoln, and the students had actually created all the parts for their display on a 3D printer. So they had designed those online, sent those off, had them printed, come back. Very inexpensive to get it done. Doesn't take a long time. Those printers are getting faster. It used to be you would print inside this machine, and there would be all this crap around it. And now it's really like it's melting plastic down and laying thin layers of it out. So it'll be interesting to see how 3D printing comes. I am most interested in the automatic automobile. I really do think. A couple of years ago, Google announced that they had already logged over 1 million miles with their fleet of vehicles, and the advances that are coming with big data and being able to. This is great. We get to talk about tech on this show, Andrew. This is thank you. This is nice. But the advancements that are coming with big data, and IBM is a big proponent of this, of actually the way you schedule those vehicles to pick people up. Right? We have the ability to have 1 car for every 3 people in the United States. That's a prediction. And so that would mean a car would automatically come and pick you up and take you to work and drop you off and go somewhere else and continue to drive. Now, those cars are going to get a lot of use. I mean, they're going to wear out pretty quick if they're constantly driving all day, every day. But that being said, we can be a lot more efficient in the way that we use our automobiles. So I'm pretty excited about that.
And to bring it back to business and investing, just imagine that is an entire business field that is completely uncaptivated, untouched. It could really just change the lives and change the way we live our lives, rather, think about all the entrepreneurs and all of the businesses that will arise from something like that. Pretty cool.
Yeah. I just like the big data aspect of it, where you are crunching the numbers in real time, and people are submitting schedules. I need to go here, so you talk into your phone. Need a vehicle at 8 o'clock to pick me up and take me to this location. That gets auto mapped and routed, and then all that stuff works to come pick you up and take you. And you mentioned the safety aspect of it. Think about cars that literally cannot crash into each other because they are aware of everything around them at every moment, doing everything. And those, it's just amazing to me. So pretty exciting. Good stuff, Andrew. Thanks for bringing in some tech on this tonight. I always get to sit back. We have a tech show. Andrew mentioned that, home tech, and if you're only a financial tech listener, you can head over to theaverageguy.tv, and we have a show called Home Tech. Long form, we spend a little more than an hour each week talking about technology, but if that conversation interests you, head over and pick that up. And if you have questions, you can always send me an email, podcast@theaverageguy.tv. Well, if you're new to podcasting and you're looking for an easy way to do it, Stitcher is a great way to do that, available on any browser as well as both Android or iPhone platforms. It's a great way to listen to the podcast each week at home or on the road. This show and all the past shows are on Stitcher. Stitcher.com, search Financial Tech. It is education for your ears. And be sure to visit Guide Rock Capital at guiderockcapital.com and follow Andrew on Twitter, Andrew D. Hunt, and get all the show notes at theaverageguy.tv. Now, Andrew and I say thanks for listening, and we'll catch up to you next week. Remember, be smart about your investing. Guide Rock Capital Management, Inc., or Guide Rock, is a registered investment advisor that is registered with the state of Nebraska and located in Omaha, Nebraska. Guide Rock and its representatives are in compliance with the current registration requirements imposed upon investment advisors in the states in which they maintain clients. Guide Rock may only transact business in those states in which it is registered or qualifies for an exemption or exclusion from registration requirements. Important information describing Guide Rock's business operations, services, and fees can be viewed on the SEC's website at www.advisorinfo.sec.gov. Guide Rock will provide Form ADV Part 2, which serves as the firm's disclosure document to all clients. Copies of Form ADV Part 2 are also available to interested parties upon request. All investment strategies have the potential for profit or loss. Past performance is not indicative of future results. No current or prospective clients should assume that the future performance of any specific investment strategy, or product made reference to directly or indirectly on this video, website, or indirectly via hyperlink or any affiliated third-party website will be profitable or equal to past performance levels.